Good morning then, folks, on Wednesday, the 1st of November, as we are into the penultimate month of the year. We'll have a look across markets to see what is going on in a day that is likely to be somewhat range bound as we head towards the Fed later on. Now, I'm not going to speak too much about the Fed in this video. We'll break down the Fed in the video later on, having a look ahead to what we may expect from the central bank this evening. But a couple of things to go through before. The Japanese are in focus again. See, yen pulls a slide after officials escalate intervention warning. Again, we were speaking about this yesterday. The aggressive move higher in dollar yen, aggressive move lower in the Japanese yen. They do not want that thing above 150, and they have come out and suggested again that intervention is still a possibility, and they have come in and intervened in Japanese government bonds. They have purchased Japanese government bonds, reminding markets that that upper band of their 1% range is not gone, right? They removed the writing to say it's a formal band, or even a loose band, but clearly during the overnight session, they have come out and said that they have purchased government bonds to keep yields below that 1%, which shows a reluctance to let that move go too fast. But I still think they will let it go above 1% personally. I just don't think they want it going aggressively above 1%. If it was a slow, gradual grind higher, I think they'd be okay with it. But they don't want it to go romping higher, make up 40 basis points in a day. They do not want that. Right? They do not want aggressive moves. They don't want aggressive moves against the Japanese yen. They don't want aggressive moves on bond yields. They don't want aggressive moves whatsoever. So a threat of intervention from the Bank of Japan still remains, even if they had a bit of a policy tweak yesterday and did allow, or a bit of a hawkish step, but you see the Japanese yen then sell off and the Nikkei push higher due to the fact markets had anticipated them to go and do probably a little bit more than they did do. Apart from that, Asia stocks subdued ahead of Fed. Again, we await policy decision from the Federal Reserve later on in the day, and really fresh headlines is what we fresh headlines is the Japanese yen. Apart from that, there's not much movement across markets. European stock indexes are up across the board to begin the European session today, likely due to the fact that growth in the eurozone wasn't great yesterday. Inflation yesterday was lower than anticipated throughout the eurozone, and that reduces the need for any more rate hikes. Probably, in my opinion, you weren't going to get any more rate hikes from the ECB. That is another step on the road to confirming that. So markets have taken, or European markets have taken a bit of a jump off that. Now it's important to note that the negative growth within the European economy is not good for the European economy, not good for European stock indexes. But the fact that that would result in interest rate hikes being finished and settling lower than the majority of the rest of the G8, that is obviously taken as a positive for European assets. The S&P, Dow Jones, and Nasdaq, the Russell, the US index are down slightly in the overnight session, but nothing major. Asian stocks a bit all over the place, some slightly up, some slightly down, not too much to see there. Oil kind of grinds higher, bit of a sell-off yesterday, and oil goes in line with the sentiment that Israel's offense into Gaza over the weekend was not as bad as first feared. Obviously not good by any stretch of the imagination. Well, maybe not as bloody as people had imagined. Bond yields higher across the board, slightly higher, but we'll have a look at that once we get around to the charts. FX land, US dollar's pretty mixed. Aussie pretty mixed, your Kiwis lower, CAD's mixed, Euros lower, Sterling mixed, Yen higher. Really, I mean, this Euro is not really up or down by much, really, percentage change, to be perfectly honest. Euro dollar is relatively flat, albeit slightly lower. So Japanese yen is the mover across FX overnight. Mixing up my words, Japanese yen is the mover over the night in FX, obviously due to the fact that government officials, central bank officials, are still willing to intervene in the price of the currency to help keep the price of it propped up. Apart from that, we're kind of struggling for a bit bereft of ideas in this morning's session, which is understandable. Manufacturing PMI from China negative, below 50, also below consensus, not good. Housing prices though in the UK rose over the month of October, which shows some sort of a stabilization within the housing market in the UK, which is likely a bit of a positive for sterling. But obviously, you've got the Bank of England out tomorrow, which we will cross that bridge when it comes to it. Bank of England tomorrow, likely market's not likely to pay much attention to that. You would have to you'd have to imagine. But a whole load of US economic data out today. You've got the ADP employment change, which is the private sector version of non-farm payrolls, if you want to put it that way. You got the manufacturing PMI at 2 o'clock. You got job openings at 2 o'clock. Now, these are not likely to influence the Fed's decision too much. The Fed's decision will be to not hike interest rates later on. We will have to look towards forward guidance. Do they keep the foot on the hawkish pedal and continue to talk a good game? You'd imagine they probably will. Economic data remains robust in America. They still have inflation to get down further than what they've already got it. So the green light ahead for the Fed to continue talking the interest rates are possible and continue to talk hawkish, that they're not at the end of their hiking cycle. Whether they are or not is a different question that's up for debate. But economic data in the US allows them to keep their foot on the gas in terms of hawkishness, which other central banks don't really have the luxury of doing. So we'll break that down a little bit more detail later on. I wouldn't surprise me dollar strength off the back of that. You'd have to imagine, any upside from the likes of euro, sterling, maybe Aussie's a bit different, but Kiwi, Canada, dollar CAD, dollar Swiss, dollar yen. You'd have to imagine all these other currencies will struggle to gain much momentum against the US dollar either way. So the trends probably look set to continue. Dollars look set to continue higher. I think that would be a bad idea. Maybe around the release later on today, it might be a little bit tricky, but I think going forward, that US dollar trend remains intact. And I think other currencies will struggle to gain much of a foothold against them. Apart from that, you can see sterling's had a little bit of a pop higher this morning off the back of that data, but nothing major. You see Aussie pretty sideways. Kiwi down overnight and then back higher. Down overnight, you did have the unemployment rate ticking up, okay, in line with consensus, but up from 3.6 up to 3.9. Couple of, your manufacturing PMI below 50. Employment change is down. So some negative labour market figures out of New Zealand last night caused the currency to push lower then back higher. We're just kind of met back in the middle. But dollar Swiss a little bit sideways today, dollar CAD a bit sideways today, euro dollar a bit sideways, but has made another attempt lower so far. Cable, they're all pretty sideways. Dollar yen, a bit of strength in the Japanese yen, but ultimately that move higher has paused just shy of the intervention level from October last year. You can see this back here, Friday the 21st of October. We are approaching that level. That is the level that they stepped in and shot markets lower at over the course of last year. Do they step in again? They're certainly talking as if they will if markets try to make an attempt up at that level. So dollars relatively sideways in today's session, but wouldn't surprise me they rolled over again. Bond yield slightly higher. Over the course of yesterday, I say slightly higher. They started the day negative and then pushed back and broke through the highs. 2-year yield popping higher as well, which isn't the positive for stocks, but ultimately stocks were a bit higher yesterday. But oil was the mover yesterday. Oil got going yesterday. Or oil was a mover yesterday. Gold had a bit of downside yesterday, but I struggle to imagine there's much action across markets as we head towards the Fed today. You can see stocks, you can see the S&P, the Dow Jones, the Nasdaq, the Russell, all pretty sideways over the course of the last kind of 12, 16 hours. The DAX, the Euro stocks grinding higher for reasons we suggested earlier on. The FTSE relatively sideways, but that's not really doing too much. I mean, tricky trading conditions today, you'd have to imagine. I'm not so sure jumping into markets and going mad, whacking a load of lots or contracts or whatever way you trade is the best way to go about things in today's session. I'd probably urge on the side of caution, or not probably, I mean, I will urge on the side of caution. I'm not going to take too many big positions today as we head towards the Fed a little bit later on this afternoon. But I said we'll break that down in a bit more detail a little bit later on, so we'll get back to that when it comes to it. But tricky market conditions this morning and likely to remain for the rest of the day. So if I was you, I'd be careful out there, folks.